In these uncertain economic times, it's easy to be worried about protecting your wealth, your hard-earned savings, and your family's financial future. Plunging interest rates, the devaluating dollar, and political unrest constantly threaten what you have worked hard to earn and all that you own. That's why now it's more important than ever to protect your assets and have the money you need to make your dreams come true. Welcome to the Global Wealth Fortress Report with successful global entrepreneur and wealth preservation expert Joel Nagel. Joel's helped thousands of people just like you protect what you have so that you can make even more and make your every dream come true. So, sit back and enjoy Joel Nagel's offshore expert advice on how you can live the good life at a great price, where the sun never sets on your financial fortress.
Hello and welcome to another edition of the Global Wealth Fortress Report. I'm Joel Nagel. I'm coming to you today live from the JW Marriott in Las Vegas, Nevada, where we're having my annual President's Week conference. I mentioned to you we're going to grab some of the really fascinating speakers that are here for President's Week, and I'm really pleased to have as my guest Kirk Chisholm. Kirk, thanks for joining us today.
Thanks for having me on, Joel.
Yeah, great. You gave a really wonderful presentation, sort of investment oriented, but tell us a little bit about yourself and your background, your company.
Sure, yeah. So I run a registered investment advisory firm out of Lexington, Mass. We are fiduciaries. I've been an investment advisor for 20 years, and I've been through bull markets and bear markets, and I can tell you that I pretty much started in December of '99, which is really not the best time to start, right? Missed all of the 80s and 90s. But what I learned really quickly was how to protect assets, because I saw the first few years of my career, the markets just went down continuously. So really what I learned was risk management first, which is really the core of our philosophy today of risk management first. Because, back then, you really had to focus on losing less. In bull markets, it's easy. In bear markets, it's really hard. So 2008, we experienced that as well. 2015, this year, we've really gotten much better at defensive investing over the years, because really that's where your wealth is created, is by not destroying it.
I mean, I always talk about that from a legal perspective. You want to make sure you protect and preserve what you have before you worry about making more. And so I find your investment perspective very attractive in that sense.
Yeah, I mean, think about it. If you really look at the markets, when the markets are going up, it's easy to make money. Everyone makes money. But when the markets crash, most advisors will just say, hey, it's okay, just hold on, it'll come back. However, I don't really want to hold on after losing 50% of my money in 2008.
I have to wait 10 years for it to come back, exactly.
Right, or in the case of 2000, if you waited 2000 you would basically have to wait 13 years if you had put all your money in January of 2000. You had to wait 13 years to actually even break even. So, all this nonsense of just buy and hold, or I call it buy and hope, it's not really a strategy. If you focus on protecting your wealth, then you don't have to worry about it, quote unquote, coming back, right? Because you didn't lose in the first place. And the math behind that is really supportive of protecting your assets first.
So what are the specific strategies you use to help clients sort of avoid the big drops and the big downside?
Yeah, that's a great question. There's actually a lot of different things that we do. Due diligence is a big part of this, which a lot of people don't do. Most people focus on the upside, the performance. They just say, hey, look at the returns, let's just do this. What we focus on is due diligence of not losing. So in individual investments, we really focus on that part first, is making sure we understand the risks, we identify all the risks, we mitigate as many as possible, and then we have to be comfortable with the outcome. Because at the end of the day, there's always a risk in everything. Even treasuries, even CDs have risks. They might be infinitesimally small, but they're still there. So that's really a big part of what we do, is that due diligence process. Now, when it comes to alternative investments, that is really the most important thing you can do, right? Because if you're investing in real estate or teak or horses or tax liens, you have to understand what you own. And most people just say, oh, this is going to produce X return. But if they don't actually understand the risks, that's where they get themselves into trouble. Now, in the traditional markets, it's very different. We use a lot of strategies that help define the risk. So it's really about understanding what the maximum loss could be, and then from there, the upside is easy. So it's really about making money when the market goes up and not losing when it goes down.
Great. And so do you use things like stop losses and things like that to...
There's a lot of different tools that we can use. Stop losses is one. Actually, I used to use stop losses, but the market made it hard to do that. Because if you think about it, like what's happening nowadays, the market crashes, goes down 7%, your stop loss gets triggered, and then it bounces back the next day, so you pretty much are locking in that loss. 2010 was really the last year that I did that, because I think in 2010 there were 20 times where the market went up or down 10% or more in a given year. So anybody who was using stop losses that year actually lost a lot of money. What we started using were options as a way to define risk. Now it's something that most people who are not familiar with options, they think that they're risky or speculative. And that's true, they could be if you don't know what you're doing. Just like stocks. Stocks are also risky or speculative if you don't know what you're doing. However, what options were created for was to help define the risk. It's not meant to speculate, although people can do that, but it's really meant to define your risk, to say this is the most I could lose, or this is my defined area of potential outcome. And so basically with options, we can define any strategy for any situation. If you think the market's going sideways for the year, we could define a strategy to help you make money on that. If you think it's going down or up, that's really kind of one of the tools that we use to do that.
And what would be just a couple of the, let's say, asset classes, without getting necessarily into specific investments, although you can mention specific investments if you want, but asset classes that you talk about with clients that maybe a traditional broker dealer or asset manager might not be thinking about or talking about in this environment?
Yeah, so I think the most common asset that investment advisors talk about are stocks, bonds, mutual funds. Really, that's what kind of almost everybody uses. And they have kind of more of a diversified portfolio approach. They just say, oh, you put it in these 8 different buckets and you'll be fine. We're actually asset class agnostic. I really don't care what clients invest in. It could be horses, real estate, stocks. It's not about what the asset class is, it's about the investment, the underlying. So we have a lot of investors that we work with that invest in real estate. Real estate is one of the more common assets. And any real estate investor I've ever met, and you've probably ever met, every nickel they put into, every asset they have goes into real estate. They make money, they put it back into real estate. And it's great. If they understand that asset, that's what they should be doing. And we really reinforce the philosophy of people should invest in what they know. Now, different kinds of assets that we've seen, private mortgages is a big one. We do those a lot with clients because it's basically real estate, but without the fixing of the toilets and the roofs and the headaches of the tenants. Some people own physical real estate. Tax liens is another one that people love. There are other things like private company stock. We see that a lot. LLCs or private companies, that tends to surface a lot. So there's really just, I could tell you some fun ones, but really what's important is that people understand what they are investing in, and they understand that it's not just about the upside, but it's also just understanding, is the risk worth the upside? Great.
Kirk, we're just about out of time, but before I let you go, you have a tremendous podcast that you produce, and why don't you tell our viewers a little bit about how they can access and learn more about the work that you do?
Yeah, thanks, Joel. Yeah, so I have a podcast. It's called Money Tree Investing. It's one of the longest running investment podcasts, and it's a great show. We've had you on in the past, which is probably why it's so great. But we have guests on every week that talk about different aspects of investing in personal finance. So we brought you on, we brought on Nagel, we brought on a lot of other great guests, and really it's about teaching the audience of how to look at investing, how to look at different asset classes, and really how to invest better.
Great. Well, I hope that you'll take an opportunity to check out Kirk's program. I was on it. I've heard a number of them. They're really excellently very well done. So on that note, we'll have to leave it there, but I want to thank you for tuning in, and we'll see you next time on another edition of the Global Wealth Fortress Report. Until then, I'm Joel Nagel. Goodbye.
Thanks for joining Joel Nagel and the Global Wealth Fortress Report, a whole new approach to asset protection and estate planning, so that now you can live the good life at a great price, where the sun never sets on your financial fortress.